Hey trader, welcome back to MFS Trading. In this video I will show you how to use the Bollinger Bands indicator to capture high accuracy trading signals in both the Forex and stock markets. After following this tutorial you will be able to use the Bollinger Bands indicator with ease. Furthermore, you will discover that almost all trading signals generated by the Bollinger Bands have high accuracy. Before starting today's video, you can support us by using the links below the description, or you can also join Telegram to receive free daily signals. Let's get right into the video in this trading strategy. How to use the Bollinger Bands indicator. Bollinger Bands is a technical indicator used to measure volatility and determine the direction of price movement trends. In addition to trend direction, this indicator is also helpful in identifying overbought and oversold conditions. One notable feature is that during sideways markets prices tend to move between two bands. Nowadays it has gained immense popularity and is widely used in trading across various financial markets including Forex and stocks. Elements of the Bollinger Bands indicator. The Bollinger Bands indicator consists of a simple moving average or SMA with two bands. One above and one below the SMA line. The upper band is called the upper Bollinger Band, and the lower band is called the lower Bollinger Band. The upper and lower bands are determined by adding and subtracting the SMA value with a standard deviation. The standard deviation measures volatility and how far prices can deviate from the true value. The formula is as follows, as it takes into account volatility measurement. Both bands will move according to market conditions. Bollinger Bands can be found on most trading platforms, including TradingView, MetaTrader 4 and MetaTrader 5, with default parameters of SMA 20 periods and standard deviation 2. Once applied to the chart, Bollinger Bands will appear similar to this chart screenshot. Generally, the overbought condition is indicated when the price touches the upper band, but the closing price remains below it. On the other hand, the oversold condition is declared when the price touches the lower band but closes above it. Bollinger Bands as volatility measures. The market's volatility is reflected in the width of the bands. When volatility is high, the distance between the bands widens. This usually occurs when the market transitions from a sideways condition to a trending condition. Conversely, low market volatility is evident when the distance between the bands narrows, typically happening when the market changes from a trending condition to a sideways one. Trending means that prices show a tendency to move in one direction, either upward or downward. On the other hand, sideways indicates that prices tend to move up and down within a limited range. Trading with Bollinger Bands in sideways markets. During sideways market conditions, opening a position entry can be done when the price has crossed the SMA 20 line, targeting the nearest band level. Here are the rules. First, if the price crosses above the SMA 20 level, enter the trade when the candle closes above the SMA 20 with the target to close the position when the price reaches the upper band. Second, if the price crosses below the SMA 20 level, enter the trade when the candle closes below the SMA 20 with the target to close the position when the price reaches the lower band. Here's another example. Just like the previous chart, Bollinger Bands indicate a sideways arranging market. In this case, if the price crosses below the SMA 20 level, enter the trade when the candle closes below the SMA 20, with the target to close the position when the price reaches the lower band. If the price crosses above the SMA 20 level, enter the trade when the candle closes above the SMA 20, with the target to close the position when the price reaches the upper band. From this real-life example we've discussed, you should now have a clear understanding of what a sideways arranging market means, and how to execute proper open positions when such a situation occurs. Trading with Bollinger Bands in trending markets. Typically the Bollinger Bands indicator is used for Forex and stock trading during sideways markets. However, it can also be utilized during trending markets following these rules. First, a strong bullish signal occurs when the price breaks above the upper band, and the closing price is outside of the band. However, this signal is considered valid only if there has been a prior bullish trend. The second confirmation is determined by the formation of the next candle. If the opening of the next candle is above the upper band, then a strong bullish trend has truly formed. Additionally, it's important to note that in trending conditions both bands tend to widen. Second, a strong bearish signal occurs when the price breaks below the lower band and the closing price is outside of the band. Similar to strong bullish signals, this signal is considered valid only if there has been a prior bearish trend. The second confirmation is determined by the formation of the next candle. If the opening of the next candle is below the lower band, then a strong bearish trend has truly formed. Additionally, it's important to note that in trending conditions both bands tend to widen. In this chart, the current market trend is bullish. Then the price crossed above the upper band and enclosed outside of it. The opening price of the next bar stayed outside the upper band and the gap between the two bands widened. Based on this signal, we can enter a buy position and set an exit level when a price action formation indicating a trend reversal is formed or based on our individual risk-reward ratio. On the contrary, in this chart the current market trend is bearish. Then the price crossed below the lower band and closed outside of it. The opening price of the next bar remained outside the lower band, and the gap between the two bands increased. With this signal we can enter a sell position and establish an exit level when a price action formation indicating a trend reversal is formed or according to our individual risk-reward ratio. Now you've mastered the correct way of using Bollinger Bands, a technique unknown to most novice traders. Everything we discussed earlier represents the fundamental principles of Bollinger Bands that every beginner trader should grasp. Traders, if you enjoyed today's video, leave a like to it and subscribe to MFS Trading channel. Good luck for you.